Just the last minute or so, Australia's key inflation numbers have been released. These are the final pieces of the puzzle for the Reserve Bank ahead of its next interest rate decision on Tuesday next week. Our business editor, Ross Greenwood, joins us live. Ross, what do the numbers tell us?
The numbers tell us that inflation is gone down lower than anticipated. So the annual inflation rate through to the end of the June quarter is at just 6%. So you can see it really here. This is actually the monthly inflation indicator going through until the end of June, which is a separate measurement. And that's gone down even further from May, when it was last reported from 5.6 to 5.4%. But the headline inflation rate for the quarter is down from 7% to 6%, again showing that inflation appears to be coming under some sort of control. You can see that here. So you can see again that inflation peaked in the December quarter last year. Now, because the money markets expect that number there to be 6.2%, not 6%, they have rallied with the expectation that the Reserve Bank might just make different moves than anticipated by the markets until this number dropped, because this is almost the last piece of the puzzle for the Reserve Bank after seeing employment numbers last week to be able to make its decision when it comes together next Tuesday.
Okay, so which prices moved up or down the most?
Well, it's fascinating watching this because there are some big moves. I'll just drop my eyes and show you some of them. So food and non-alcoholic beverages, this is actually over the course of the year. You can see food prices up 7.5%, housing up 8.1%. That's obvious with rents, insurance very strong as well. But for the quarter, and this is really important, while food is going up, while furnishings are going up, the price of health, the price of transport, the price of communication, and the price of recreation and education have all fallen. So in other words, those prices now starting to fall are starting to ease back on the inflationary pressures being caused by other things, which does include, say, for example, insurance and financial services, big jumps in food and non-alcoholic beverages. Obviously, energy prices continue to rise. Insurances keep on rising. But this is really starting to if you like, paint a picture that we have seen the worst of the price rises. And yes, that 6% inflation rate, though coming down, is still much higher than the Reserve Bank's preferred target band of between 2 and 3%, but it does show that this glide towards some sort of sense of normal, at least for Australians, is coming to pass.
Okay, so anyone with a mortgage now wants to know this big question, which is what is all this going to mean on Tuesday when the Reserve Bank meets? What's your expectation, Ross, as to what they'll do?
Well, I would suggest after this number, there's a very significant case that they can hold interest rates where they are. They can afford to wait and see what the 12 interest rate rises have done to Australian households. They can see really in many ways that behaviour is changing, the price pressures are coming out. That's what those interest rate rises are supposed to do. You can see here the cash rate sitting at 4.1%. Most major banks have still got at least 1 or 2 extra rate rises, sort of, if you like, printed in. Now, this is what I want to show you. Money markets, as soon as this rate dropped, this inflation rate dropped lower than expected, you can see here they've actually dropped down from around 4.2 down to 4.15%. This one-year bond yield is pretty much as close as a market rate to the cash yield as you can possibly get. And so you can see their expectations as to what will happen. The other one is the Australian dollar. So have a look at the Australian dollar. When interest rates are likely to go up, the Australian dollar is stronger. When interest rates are going to be on hold or falling, the Australian dollar falls. The Australian dollar down by around about 0.75%, down to 67.39 US cents. You can see before that rate dropped, it was sitting around 67.8 US cents. So it's dropped around 0.5 cent since that number dropped. And the other thing, the stock market, have a look at that. So the stock market rises when there's an expectation of no more interest rate rises. And today, what you can see there, Ash, is that the money markets are very much appreciated this inflation number being better than expected, and as a result of that, the stock market much higher today off the back of it.
Ross Greenwood, appreciate your analysis. As always, we're going to be seeing more reaction next hour from the Treasurer, Jim Chalmers. We'll be showing you that news conference with the Treasurer live with his reaction to those crucial figures just out in the last few minutes.